This is another podcast from Alpha Business Media. Welcome to the Deep Dive. Today we're diving deep into a topic that's really shaping decisions everywhere, globally. And specifically, we're looking at its importance and, well, rapid evolution right now in Nepal. We're talking about ESG, environmental, social, and governance. Now, is this just a buzzword, a passing trend for businesses in Nepal, or is that actually becoming, fundamental, a necessity for staying competitive, attracting investment?
Exactly. And you've gathered a great set of sources for us here, guides, research, insights from people really involved on the ground in Nepal. So our mission in this deep dive is to unpack all that for you. Let's get past the jargon. We're exploring the practical side, the real benefits, the challenges which are definitely there, and the opportunities in actually doing sustainability in Nepal. We want to understand, using this material, why it matters so much now and what it really means for businesses, especially when it comes to getting investment and, well, long-term success.
Okay, let's start right there. Unpack ESG itself. Before we even get to Nepal specifically, what is it? In simple terms, the material breaks it down into those three areas, right?
It's essentially a framework, a way to look at a company's performance, not just on profit, but, how it impacts people, the planet, and how ethically it's actually run. So environmental, E, think of that as how a business interacts with nature. It covers things like managing energy, emissions, handling waste, water use, pollution, climate change risks, biodiversity, basically managing environmental risks and finding opportunities for the long haul.
Okay, the planet side.
Then social, that's about people. Relationships with everyone the company touches, employees, suppliers, customers, the local communities. So labor practices, worker well-being, DEI, diversity, equity, inclusion, human rights, community engagement, customer satisfaction, product safety. It's about, well, human capital and the social footprint.
Got it. People.
And finally, governance, G. That's kind of the operational backbone. It's the systems for running the company ethically, transparently. Things like how the board is set up. Is it independent? Executive pay, shareholder rights, reporting transparency, anti-corruption measures, and, crucially, how they oversee their E&S commitments. It's all about accountability, ethical leadership.
And the material stresses these aren't separate silos, are they?
Not at all. They're deeply interconnected. That's key. Strong governance, the G, often creates the structure and the commitment you need for good environmental and social performance. I mean, if the leadership actually prioritizes ESG, you're much more likely to see real investment in cleaner tech or fair labor.
And it's more than just compliance, isn't it? More than just ticking boxes. The sources suggest it's strategic, aiming to create actual value and long-term sustainability.
Absolutely. It's a mindset shift.
So why the big global push now? What's driving this huge shift we're seeing everywhere?
Well, there are several big forces. First, investors. They're increasingly using ESG data alongside financials. They want a fuller picture of a company's health, its future prospects, its risks. They're looking at long-term success and, the ethical impact of their money.
Right, the move beyond just profit for shareholders.
Exactly. That shift towards stakeholder capitalism, considering everyone affected, employees, communities, the environment. That 2019 Business Roundtable statement was a big moment for that globally. Plus, ESG is just a really important risk management tool now. It helps businesses spot potential problems, governance scandals, climate disasters, social unrest before they blow up.
And regulations, too, you mentioned.
Oh, definitely. Regulations are tightening, especially in big markets like Europe. You've got things like the CSRD, the EU taxonomy. That puts pressure on international companies, and inevitably that pressure flows down through their supply chains.
And that's the connection to Nepal. That's how it hits home.
Precisely. What's really interesting here is how that global momentum, particularly the regulatory push from developed countries, directly impacts developing economies like Nepal. It happens through trade, through foreign direct investment FDI, and those supply chain requirements. Any Nepali business wanting international partners or looking to export or attract foreign capital, they're going to face more and more questions about their ESG performance.
But it's not just a threat, right? The material also says it's an opportunity for companies to get ahead of the curve.
Absolutely. A chance to stand out, attract responsible capital. And when you look specifically at Nepal, with its own vulnerabilities, climate change is a huge one, and its development goals, the sources make it pretty clear. ESG is moving from nice to have to need to have. Awareness is growing. Some leaders are already acting. Experts quoted, like Sanika Manantar, basically say it's gone from buzzword to must-have for smart business. It's driven by Nepal's own sustainable development needs, its climate pledges, and the goal of building a more resilient economy.
So it's pressure from outside and needs from inside.
Yes, that dual pressure. Internal drivers like climate vulnerability, social development needs, resource management, plus the external pressure from investors, markets, IFIs, international financial institutions. That combination suggests it's a fundamental shift, not a fad. And one point really emphasized for Nepal is the G, governance. Given the country's history and the need for transparency, strong governance is seen as absolutely critical for building investor trust and making sure E&S initiatives actually work on the ground.
Okay, so it's clearly important. But let's talk tangible benefits. The material lists some real advantages for Nepalese companies. How does it actually create value or help attract money?
Right, the practical stuff. Global studies, including meta-analyses mentioned in the documents, consistently find a positive link between good ESG performance and better financial results. How? Well, first, cost savings. Simple things like eco-efficiency, reducing energy or water use, managing waste better that directly cuts operating costs. For SMEs in Nepal, which are so vital, basic resource conservation is often a really accessible first step. Saves money, helps the environment, a clear win-win.
That makes sense.
Proactive ESG thinking can also spark innovation, leading to better processes or new sustainable products. And then there's talent. Companies known for strong social practices, fair wages, safety, DEI, they find it easier to attract and keep good employees. That boosts morale, productivity.
But there's that perception issue, right? That it's just a cost.
Yeah, that's a key challenge noted in Nepal. The material really stresses the need to shift that mindset. See ESG as an investment, one of long-term savings and value creation potential, not just an expense line. Focus on the strategic return over time.
And attracting investors, that seems huge.
Absolutely crucial. Attracting investors. ESG is fast becoming a core part of investment decisions globally. It helps investors manage risk and align their money with their values. Transparent ESG reporting builds trust. Companies with good ratings might access capital on better terms.
And FDI, foreign investment.
Yes. FDI from investors with high ESG standards can actually help lift practices within Nepal. And good governance, that G, is a known magnet for FDI. We're already seeing examples like Nepalese green bonds, NMB Bank's initiatives. The PEV sector, private equity and venture capital, reportedly sees ESG as key to attracting that foreign money. Someone from NMB Bank, Sharat Tegituladhar, is quoted saying that meeting international standards positions Nepal competitively for these sustainable investments and green finance.
But there's a warning, too, isn't there, about ESG laundering?
Right, a really important caution from the sources. While FDI can help, weak local regulation or enforcement in places like Nepal could allow investors who aren't genuinely committed to just greenwash their image or potentially exploit situations. So strong domestic oversight and rules are essential to make sure FDI brings real positive impact.
Okay.
There's also mention of a potential green premium companies performing well on ESG might get slightly better financing terms because there's growing demand for sustainable assets.
And the material even provides a table showing specific E, S, and G factors investors look at. That's really practical. Things like climate risk, labor rights, board independence.
Exactly. That table makes it concrete. It's a roadmap for businesses wondering what investors care about.
Beyond money, what about the brand?
Huge benefit. Building a sustainable brand. Strong ESG enhances reputation, builds loyalty with customers, employees, especially younger generations who really care about this stuff. And strong social practices, particularly real community engagement, build local support, that social license to operate.
That sounds critical for sectors like hydropower in Nepal.
Absolutely vital. Conflicts can derail huge projects. That social license is a key intangible asset, reduces risk. Sandeep Shrestha is quoted making that link. Strong ESG means fewer disruptions, better reputation. And, in a context like Nepal, where building trust can sometimes be a challenge, being transparent about your ESG journey, even the struggles, is powerful for building credibility.
And finally, managing risk. That seems paramount given Nepal's situation.
Paramount. Managing risks. Nepal is incredibly vulnerable to climate change, impacts glacier melt, GLOFs, landslides, the effects on farming, hydropower. ESG helps manage these physical risks. The source mentions potential GDP loss up to 9.9% by 2100 without action. That's staggering.
Wow.
Then there are transition risks meeting global supply chain standards. Non-compliance means fines or losing markets. And operational risks, poor working conditions, community conflicts cause disruption, damage reputation. Corruption, lack of transparency deters investors. Graham from Anthesis Group is quoted, ESG helps organizations systematically identify and manage these diverse risks.
So the ecos over Nepal isn't just environmentalism, it's survival.
It really is. Climate adaptation, resilience, its core business continuity, economic survival strategy given the extreme vulnerability, and companies showing strong risk management here. They're more likely to attract that patient capital, long-term investors like IFIs who value stability.
Okay, a really strong case for why ESG matters. So let's shift to what's happening now. What's the current state on the ground in Nepal, according to these sources? Who's doing what? What are the rules? What are the hurdles?
Well, awareness is definitely growing, and it seems to be moving from just talk to more concrete actions, particularly high awareness noted in the PVC sector, maybe due to IFI influence there.
Any examples of early movers?
Yes, the material highlights several. In banking, NMB Bank stands out first: green bond, ESG management, financing EV solar, Nabil Bank doing carbon reports, NIFRA with its green bond framework, often guided by IFIs, it seems.
Okay.
Aviation, Yeti Airlines mentioned for its carbon neutrality goal, UNDP partnership. Tourism, Hyatt Regency Kathmandu noted for sustainability efforts, hydropower, but Wall Power Company for governance, and other sector initiatives starting. Even food tech. Food Mandu using bicycles.
So it's starting to spread.
It is. Historically, the focus was maybe more on traditional environmental impact assessments, EIAs, but now there's growing attention on climate risks, human rights, gender issues.
And you mentioned IFIs driving this.
Yes, the sources really highlight IFIs and foreign investors as key drivers, especially in finance, a kind of top-down push happening.
And different sectors focus differently.
Makes sense, right? Hydropower has unique ENS risks. Tourism focuses on eco-friendly practices. Finance is about risk management, green finance. A one-size-fits-all approach probably won't cut it.
What about the official rules, regulations? The central bank, NRB, is involved.
Yes, NRB is key. They issued Environmental and Social Risk Management ESRM guidelines back in 2018, updated in 2022. These require banks and financial institutions to integrate ENS risk assessment into lending. They have due diligence processes, exclusion lists. They've also worked on a green finance taxonomy. And they mention climate risks in their stability report.
Okay, so the banks are regulated on ENS.
But here's a critical point from the sources. The current NRB KSRM guidelines apparently don't cover the G, governance. That's seen as a significant gap.
Interesting. What about the stock market regulator, CBON?
Well, there's a strong view in the material that SEBI should issue proper ESG guidelines for listed companies. India's BRSR is mentioned as a possible model. Some research suggests SEBI management is open to supporting ESG investment. And of course, there are existing laws on environment, labor, child labor, gender equality.
So the current regulation is mostly risk-focused.
Seems that way. Mainly NRB's ESRM, quite risk-oriented, maybe a bit reactive. The suggestion is a need to shift towards proactive regulation, things that incentivize opportunities, like disclosure rules from SEBI. And fixing that missing G in the NRB guidance seems a priority, because good governance underpins everything else.
Makes sense. So given that, what are the big practical challenges businesses face? The sources list quite a few.
Oh, yes. The hurdles are real and significant. Financial restrictions are a huge barrier, especially for SMEs in a developing country. Investing in green tech, upgrades, training costs money. Access to green finance is still limited. High interest rates don't help SMEs either.
And awareness, expertise.
Big one. Lack of awareness expertise. Many businesses, particularly SMEs, might just see ESG as a cost, not understanding the benefits. There's a shortage of specialists, too. Although, interestingly, the material has conflicting views on investors. Some sources say they still focus only on financials. Others see growing ESG interest among active investors in Nepal. So that might be changing.
Well,
Economic priorities. Sometimes governments prioritize immediate growth over longer-term ESG goals, consumer behavior. In emerging markets, affordability might trump sustainability for many consumers. And a massive one, data availability and quality. Lack of reliable data for tracking SDGs, for ESG reporting. Banks struggle to get client data for carbon emissions, for example. This makes informed decisions hard, and it's tough to prove the value of ESG efforts without good data.
infrastructure issues, too.
Yeah, infrastructure deficiencies, bureaucracy, red tape, these hinder SMEs especially. And even the existing EIA system has problems noted: report quality, public participation, monitoring effectiveness.
The SME challenge seems really central.
Absolutely. SMEs are vital but face the biggest barriers: money, info, infrastructure. They need adapted, low-cost solutions and support, or a huge part of the economy gets left behind. And that data issue isn't just about reporting. It stops you setting baselines, tracking progress, showing value. It feeds that no evidence cycle.
The conflicting investor views are interesting, though. Suggest maybe a pro-ESG segment is starting to emerge locally.
It could well be a positive sign, perhaps.
How do international standards fit in, the IFIs? Do they help or complicate things?
They play a major role, often setting the standard for projects needing international funds. The IFC International Finance Corporation has its performance standards. The Upper Trishuli 1 hydro project example showed challenges in applying these standards practically in Nepal issues around consent, language access. But IFC also invests, like in NMB green bonds, and runs initiatives like Powered by Women in hydropower.
And the World Bank, ADB.
World Bank's new framework for Nepal prioritizes resilience, climate, jobs, with funding for green development. ADB has its safeguards provision covering environment, displacement, indigenous peoples. AIM is project sustainability.
So these standards become de facto requirements.
Often, yes, for international funding. The Trishuli example shows the gap between standards on paper and implementation realities. It highlights the need for better local oversight, community empowerment, capacity building.
But it's also an opportunity.
Definitely. Engaging with these IFC, WB, ADB standards helps Nepalese companies and regulators build their own ESG capacity, learn best practices, align globally. It's useful as local rules evolve.
Okay, we've got the why and what. Let's get practical, the how-to. For a business in Nepal, especially an SME, how do they even start? It seems overwhelming. The sources offer a toolkit, though.
Yes, and it tries to make it manageable. The first step is basically understand your impact. Start with a simple materiality assessment. Figure out which ESG issues are most relevant, most material to your business and your stakeholders. This helps focus effort, especially if resources are tight, which they usually are for SMEs.
How does that work? Simply?
Well, you identify and talk to your stakeholders, internal like staff, external like customers, community, maybe investors, regulators. Their views are gold. Then list potential ESG issues relevant to your sector. See what others are doing. Then prioritize. Which issues have the biggest impact on your business? Which are most important to stakeholders? Maybe use a simple matrix. SMEs should just pick a few critical, manageable ones to start.
And that engagement needs to be genuine.
Absolutely. Effective assessment hinges on authentic engagement. In Nepal's community-focused culture, ignoring local or employee views means you'll likely miss key issues and undermine the whole thing.
So who are these key stakeholders?
Employees, customers, suppliers, local communities, investors, if relevant, regulators, understand what they expect. Methods can be simple. Surveys, chats, maybe meetings. Two-way communication is vital. And in Nepal, where trust building is so important, proactive, transparent engagement is a powerful tool. It can really set responsible companies apart.
And integrating ESG into operations for SMEs. Gradual is key.
Totally. Gradual implementation, focusing on a few core issues first, that's much more feasible. And the material suggests leveraging Nepalese culture, strong community ties, respect for nature. SMEs can build on these inherent values, making it feel more natural, less imposed.
What might that look like practically? ESG for an SME.
Okay, so for E, ecology. Simple energy saving, efficient lights, maybe solar if possible. Water saving, rainwater harvesting, reuse. Waste reduction, recycling, proper disposal. Maybe thinking about sustainable purchasing. For S, social. Fair wages, safe conditions, maybe some basic training for employees. DEI, focus. Local hiring suppliers. Community engagement. Product safety. Customer data privacy. For G, governance. Transparency, clear communication, maybe a simple annual update. Ethical behavior, clear anti-corruption stance, maybe a basic code of conduct. Clear responsibility, even if it's one person overseeing ESG initially.
And the source has that table of low-cost KPIs for SMEs.
Yes, that table is super valuable. It directly tackles the how-to for SMEs by giving concrete, achievable starting points. Things like tracking monthly percent reduction in electricity bills, kilogram of waste recycled, employee training hours, percent women in staff management, just having a code of conduct available. It demystifies ESG for businesses facing constraints.
And reporting progress. How do SMEs communicate without costly reports?
Reporting is key for transparency, accountability, talking to stakeholders, attracting investors. But for SMEs, keep it simple. Updates on the website, social media, maybe a section in an annual report or newsletter. Honesty and showing progress are key, not perfection. Just say, what are we doing? Why? What are our goals? How are we doing? Even small wins. What are the challenges?
Authentic storytelling, maybe?
Exactly. Focus on telling your story authentically first, rather than complex standards. That's more accessible. And reporting is a chance for feedback, creating that improvement loop.
And who are the local leaders others can learn from? Examples mentioned.
Yeah, the material lists those we touched on earlier. NMB Bank, Green Bond, ESG management. Nagel Bank, carbon report.
Oh, yeah.
Yeti Airlines, carbon neutrality goal. Hyatt Regency, sustainability initiatives. But Wall Power, governance focus. Food Mandu, bicycles. NIFRA, green bond framework.
Why are these local examples so important?
They're critical. They
Mhm.
show ESG isn't just some Western concept, it's feasible and beneficial in Nepal. These early movers get a reputational edge, attract investment, and hopefully inspire others to follow.
Okay, bringing it all together now. Looking ahead, what does ESG mean for Nepal's overall development path?
Well, it's fundamentally linked. Corporate ESG efforts directly help Nepal meet its national commitments, the SDGs, where progress needs a boost, the net zero by 2045 goal, climate pledges, NDCs, the National Adaptation Plan, NEP, think renewable energy projects hitting climate goals, responsible farming, helping food security.
The private sector role seems crucial then.
Absolutely vital. The government can't hit these ambitious targets alone. Private sector ESG adoption is critical for mobilizing the capital, the innovation, the operational changes needed. Encouraging ESG also reduces risks for Nepal's development. Sustainable hydropower, for instance, cuts fossil fuel use and addresses climate vulnerability, essential for Nepal.
So, final recommendations from the sources. What should businesses and policymakers actually do?
Okay, for businesses, start small. But start now, focus on what's essential for you. Get leadership buy-in commitment from the top is key. Integrate ESG into core strategy. Don't isolate it. Educate and engage everyone, employees, stakeholders. Collaborate with peers, associations. Be transparent, share your journey honestly. And crucially, view ESG as an investment, not just a cost. That mindset shift is fundamental.
And for policymakers.
Strengthen the rules. 7 guidelines on disclosure, NRB adding G to ESRM. Provide incentives, maybe tax breaks, preferential finance for leaders like India does. Build capacity support training, awareness for businesses, SMEs, professionals. Improve data infrastructure collection, availability. Promote green finance, develop those markets. Ensure compliance with existing laws is strict. And facilitate dialogue between public and private sectors.
A coordinated approach sounds necessary.
Yes, coordination across government bodies,
Yeah.
NRB, 7 ministries, is stressed, not piecemeal efforts.
Yeah.
And a balance, setting requirements, rules, but also providing support, incentives,
Yeah.
capacity building, especially for SMEs facing those barriers.
So this deep dive really makes it clear. ESG in Nepal isn't just a trendy term flown in from overseas. It's becoming fundamental, part of the core of doing business. Driven by global pressures, yes, but also by Nepal's own urgent needs and vulnerabilities.
Exactly. The sources frame it as a strategic imperative for Nepalese businesses to thrive, increase value, attract investment, and contribute to the country's sustainable development and prosperity. It needs commitment from everyone involved. Delaying widespread adoption, that's framed as a missed opportunity and, frankly, a growing risk.
And that final thought from one source really sums it up. Integrating ESG practices is not just about compliance, but about creating long-term value for both people and the planet. By embracing these principles, Nepal can pave the way for a more sustainable, equitable, and prosperous future. So here's a final thought for you, the listener. Considering those real challenges like data gaps and financial hurdles for SMEs, how can those innovative, low-cost approaches we heard about from local pioneers become the norm, not the exception? How do we make ESG truly inclusive across Nepal's economy? What specific small step could you explore or maybe advocate for in your own world after hearing all this? Something to think about. That's our deep dive for today, drawn from the material you shared.